Welcome to Part 6 of our retirement benefit training for employers. For this part of the training, we will be discussing leaving covered employment. In this presentation, we will review various options available to members who leave covered employment, specifically leaving funds on deposit, requesting a refund, and options for State ORP members. Let's start with leaving funds on deposit. If an SCRS or PORS member leaves funds on deposit with PEBA upon separation of service, they may apply for retirement upon reaching age eligibility if they have sufficient earned service. Class 2 members must have at least 5 years of earned service, and Class 3 members must have at least 8 years of earned service to receive a monthly retirement benefit. It is the member's responsibility to apply for retirement once eligible. Retirement is not automatic. Funds left on deposit continue to earn interest until the account becomes inactive. An account becomes inactive on July 1st if no contributions have been received during the preceding fiscal year, that is, from July 1st to June 30th, and no other active correlated system or State ORP account exists. Members can leave their funds on deposit until the latter of the following dates: April 1st of the year after the year in which the member turns 72 years old, or the year in which the member retires. IRS penalties may apply if distributions are not made in a timely manner and in accordance with their regulations. It is important that members who leave their funds on deposit keep their address up to date. Through Member Access, members can also update or change their beneficiaries in Member Access. This is quicker and easier than sending in a paper form, which requires a notary signature. Next, let's go over requesting a refund. To request an SCRS or PORS refund, the member must terminate employment from all covered employers and correlated systems. By state law, the refund can be paid no earlier than 90 days from the member's termination date. Only a member's contributions plus interest will be refunded. Employer contributions will not be refunded. If a member returns to covered employment before the refund is issued, it will be automatically canceled. Furthermore, loans or hardship withdrawals are not permitted by law. By taking a refund from an SCRS or PORS account, members forfeit their rights to service or disability retirement. A refund also cancels all service credit, including earned and purchased years of service. This withdrawal service cannot be counted towards retiree health insurance eligibility under the state health plan. The easiest way for a member to request a refund is through Member Access. Of course, a paper form is also available, Form 4101 Refund Request. Members must provide a copy of their driver's license or state-issued ID as part of the required documentation. If a refund request is received after a member is denied for disability or retirement, PEBA requires that the member send a letter stating that they are electing a refund in lieu of pursuing an appeal of the disability retirement denial. There are 3 ways that a refund payment can be dispersed: a single sum payment, a direct rollover, or a partial rollover. A single sum or lump sum payment's pre-tax portion will be subject to 20% federal tax withholdings at distribution. Additional federal taxes may be owed, and if under the age of 59.5, an IRS penalty may be assessed. South Carolina income taxes will also be assessed during the year in which the refund was received. Encourage members who request this kind of payment to consult a personal tax advisor for assistance. Members who receive a refund in 2020 and complete Form 4275, the COVID-19 certification, which certifies that their refund meets the requirements of a coronavirus-related distribution, are not subject to the automatic withholding of 20% federal taxes, and if under the age of 59.5, may also be exempt from the 10% IRS early withdrawal penalty. The waiver of the automatic 20% federal tax withholding does not necessarily mean taxes will not be owed on the distribution. For this reason, the member should consult a tax advisor for more information on the tax implications of this kind of refund. Members may roll over their retirement account balance into an IRA, 401k plan, a 401a eligible plan, a 403a plan, a 403b plan, or 457 plans. If a direct rollover is chosen, the pre-tax portion or total balance is paid directly into the eligible retirement plan. For partial rollovers, members indicate how much they wish to roll over, and the remaining balance will be paid directly to the member in a single sum. Any monies paid directly to a member and not rolled over will be subject to the applicable taxes and penalties as cited previously. Once again, a member should consult a tax advisor for further information. After the receipt of a refund request, you will receive an EES task list notification. The notification will link either to an active member refund task or an inactive member refund task. It is important that the information you provide on the task list item is not estimated or projected. People will refund employee contributions based on the information provided by you, the employer. If there is an overpayment that results from the information submitted by the employer is responsible for repaying the overage. In the case of an active member refund task, the employer enters the last day of earned compensation, termination date, and the date of the member's final paycheck. Be sure to include any leave payout or furlough payout information. Also include the member's final quarter payroll information. If the employee is still active and thus ineligible for a refund, or you are unable to locate any employee records on the applicant, please indicate by marking the appropriate box in step 1. Once you are done, please carefully review the information and submit the task. You do not need to mail anything to PIBA. In the case of an inactive member refund task and the member is no longer employed, please provide the termination date and confirm the final quarter information. If the member is still actively employed and ineligible for a refund, or you are unable to locate any employee records on the applicant, please indicate by marking the appropriate box. Once you are done and have carefully reviewed the information, please submit the task. Again, you do not have to mail anything to PIBA. Finally, let's review options for State ORP participants. There are no minimum age or years of service requirements for a State ORP participant to retire. Rather, the participant can request a distribution at termination of covered employment or after they reach the age of 59 and a half. Participants may leave funds on deposit with their chosen vendor until they elect to receive them. The IRS does, however, require an annual minimum distribution beginning at age 72. State ORP participant benefits are based on the account balance at retirement. Fees, distributions, and investment gains or losses will affect the balance. Participants who take a distribution prior to age 59 and a half may be penalized by the IRS for early withdrawal. State ORP participants who return to covered employment will continue to contribute to their State ORP account as an active participant in that program.